Good evening, everyone. Welcome to Saturday Night Live and Rambling with a special guest host tonight. Miss Jane Post is substituting for E Train, who
Hello,
is
sick.
yeah, who is sick. I don't know if she's got the same thing I've got, or same. Let me reword that. Same thing I had. I definitely didn't give it to her, but she's feeling kind of poorly. So Jane has graciously agreed to step in tonight and try to keep me honest. So Jane, thank you.
You're welcome.
Good to
I'll
have
be
you.
doing the things like Ellen. I'll be doing the things. So looking around here like her, I totally understand now when she says she's doing the things, how she how it is.
There's a lot of little things going on.
There
It is
is.
good to see everyone. Hope y'all had a good week. Um, I will still be a little wheezy. Good news is I'm no longer contagious, particularly over the internets. Um, so hoping that Jane, as a member of the family, that you don't share that particular gift that
Oh,
Ellen's going through now.
oh no. I was telling before the stream started, telling Clay I was doing my herbs. So and now that I have an exchange student going to school, she might have brought it home, but she hasn't given it to me yet. So cross your fingers. I'm sure something's going to come home soon.
Yeah, I still haven't decided what to do to the student that I think infected me.
Someone had to
The,
infect that one. It's just that
the
time of
mullet.
year.
So tonight we're going to try to catch up a little bit. It has been a few weeks since we've really been able to take a look at things going on in the economy and the markets, which obviously is one of my loves. I do love this stuff, and want to try to communicate it in such a way that it helps you make some sense out of what's going on in the world, in the markets, in the economy, what you can kind of, look forward to, what the risks are. So we'll go ahead and get started on probably the headline item of the past few years: inflation. Now, over the past, I don't know, 6, 8 months, everybody, financially in the markets, investment wise, whatever, has kind of been breathing a little sigh of relief, thinking that, the inflationary beast has finally been tamed. But here we are staring at what I'm calling the second coming of inflation. And this time it's not due to a pandemic. It's not supply chain issues or, shipping containers getting stuck in the outside the port. Even though if the strike comes in January, we may see some of that again.
So have they delayed the strike? Because I thought
They
they were
delayed
strike.
they delayed the strike. They agreed to a 67% wage hike for 3 months. And then in January, everything's on the table again.
Now, do you think that's because Ron DeSantis said that he would have the National Guard to run the ports so that even if there was a strike, they would still be able to run cargo out of Florida?
What their motives were, I honestly am not sure. I believe that would have some sort of impact in the decision, but their main concern still is automation, losing jobs to automation. I had a little video of a Chinese port showing how it was automated and all the containers and everything were moving around without people, touching them, handling them, whatever. You had a bunch of kids sitting at computer terminals with their little joysticks controlling
Right.
everything. And you had, I mean, some of them really looked like they were 15 years old.
They did. They did. They would look
It
very.
was it was scary young. And I think that's the big fear of the longshoremen. So even if Florida ports stay open, I mean, LA, Boston, um, you've got
Even
Charleston,
Canada,
you've
you could run stuff down through Canada, or you could run it up through Florida if you had to for some
yeah,
things.
I'm just not essential things probably, and some essential things they have a 2 or 3 month supply in, in warehouses or whatever. So there is some cushion there, but honestly, what the impacts would be, I don't know. Now the leader of the Teamsters union is saying, he will cripple the nation if his guys go on strike. Now, is that just bluster or, he's certainly got, yeah, it could be a lot of bluster.
I think it is because you could run it up through Brownsville. If you brought it into Mexico, you could run it that way, or run it down through Canada or through Florida, or the added cost, but they could bring it across. So
Yeah. And it'll be, I don't know how much more the added cost would be. And in addition, you've got to wonder how much more, like Mexican ports, how much, or Brownsville, how much more traffic can they handle?
right,
If they're all, can they handle the excess or even part of the excess that would be generated by a number of the major ports definitely closing down?
right.
Because, California, New York, Massachusetts, they're not calling out the National Guard. And, out of the top 5 or 6 ports, 7, 8 ports, all but one are located in blue states. So
Now, can't the president order the ports open?
he can order what's the act?
The cooling off period, isn't it a cooling off
Yeah, it's a
period?
90-day cooling off period. So he can order them back to work for 90 days. And the union boss, and forgive me, I forgot his name, he actually addressed that. He said, he can do that if he wants to. But he then intimated that the amount of goods offloaded will be a quarter
Yeah,
or a third of what it normally is. So, they only win if they can cause some congestion and some supply chain issues. And, a lot of the oil we use for gasoline is imported.
yes, the lighter grade, yeah,
Um,
grade
the
oil.
lighter grade, yeah, the US produces a lot of oil, but it's a much heavier, thicker grade. It's more sludgy. It's better for lubricants, heavy lubricants, that kind of thing. You can still refine it into some gas, but not as efficiently, not as much. So what the net effect of all those things are, I'm just not sure. Honestly, I have no real way. I tried to spend some time digging it, but I have no real way to accurately estimate the impacts.
I don't think
So
it's a good look for them. I mean, especially when North Carolina, the people are trying to dig out from North Carolina and Tennessee and Georgia and Florida, that now you're going to try to cripple them when they need resources the most. And now you
yeah,
want to cripple them?
this guy doesn't care about what others think.
Oh, I
He's
know.
like, he is all about his guys, quote unquote, and trying to get them a 70% raise plus guarantee against no automation.
Could the president fire them all like they did the air traffic controllers and bring in new people? Is that an
No,
option?
no, the air traffic controllers are actually federal employees.
Oh, okay.
So the president wouldn't be able to force private companies or sometimes a local kind of quasi governmental entity runs the port. He really couldn't compel them to action.
Okay.
So the choices are limited. The impact is uncertain. But we will be finding out more about that in January, February. And if they do go on strike, what the immediate effects will be, 2, 3 days, a week. This guy intimates you'll start feeling some pressure. You'll start seeing prices rise. You'll start seeing some shortages in some essential goods. Like almost all of our antibiotics are imported through China. So if the
Oh, we talked about that. The majority of our there is no antibiotics made in the United States. I mean,
yeah,
I worked for a major medical company prior to where I work now. And the majority of our medicines, about 90% of our medicines, are made in China.
Yep. China,
But
India, some in Europe.
They don't typically do that by container. Because they're stable and they have to be air conditioned and stuff, they'll usually bring that by airplane, or at least some of it will come by air.
Yeah.
Rather than ship. And it does come from China to the West Coast, not the East Coast. So right. I don't think you necessarily have to worry about anything coming from China would automatically go to a West Coast port. I think more, in my opinion, is more exports go out of the East Coast than the West Coast. So what now are you impacting for export?
Yeah. And a lot of U.S. exports, are food items. Now, some of them, like grains, store pretty well. We import most of our fruits, vegetables, particularly during the winter. Vegetables, potatoes will store for a little while, but fruits, no. So you could see grocery stores, starting to run short or run out of fruits pretty quickly. Trying to think what else we export in the winter.
Well, I think that goes back to your inflation, when things are going to cost more if they have to fly them in versus ship them in by
and again, there's not that much excess capacity in cargo planes. They're already fairly well maxed out, and you don't have a dry pool of them ready to activate and put in service. So again, I'm not sure how effective alternative methods of, trying to get around the ports would be. And if a cargo plane comes in from China, I'm thinking that a Teamsters union still unloads it. Which one union?
Yeah.
Which one union won't undercut another. So that gets more interesting.
Oh, yeah, you're right. I didn't think about that. I just don't think it's a good look for them. I mean, I understand that, you're worried about automation. I mean, I don't know if you saw the video of Elon's robots the other day. I mean, that's terrifying, isn't it? And Boston Scientific, of course, has those robots as well. I mean, just simply terrifying. But how is it when people are in need and have to dig out and need those supplies to recover? And now you want to have a strike and make goods more or not give them the goods? The Teamsters then lose, the advantage, I think, when it comes to media.
Yeah, I would like to think so, but I'm also sitting there thinking the media is so deep in their pocket. And part of me thinks that they delayed the strike so it wouldn't have any impact on the election.
Oh, I 100% agree with that.
So,
they want to cripple a certain candidate, but I can't talk about politics with my other outside jobs. So
we won't get into that, but
you won't get me in trouble. But I can't talk about politics right now until after the election.
Yeah. But that's something to keep in mind. And we'll even, I'll even talk about that a little bit further when we're looking into the future a little bit. But, we're talking about inflation, the second coming of inflation. Inflation's kind of like, I guess I'm viewing it like an economic zombie, just refuses to die. This isn't, I need to be clear, this isn't a repeat of what we saw in 2022. This is the drivers, the forces behind this increase in inflation are very different. The dynamics are very different. And unfortunately, this time it's probably a little bit more insidious. Let's start with taking a look at what's known as the Producer Price Index. Now, there's a ton of different inflation indices. And each one takes a little bit different look, a little bit different angle at trying to compute what inflation actually is. This is an index of raw materials that producers buy to convert into finished goods to sell to you, the consumer. The price the consumer pays is generally reflected in CPI. But PPI is kind of the economic equivalent of checking the weather before you step outside. It kind of tells us what's in the pipeline as far as price increases before they hit the consumer. Yeah, I kind of equate it to the noise you hear in your car engine before the check engine light comes on. Now, in September, this past month, the data we get is usually a month behind. The PPI rose 1.8%, which was above expectations of 1.6. May or may not be significant. But the important number is called core CPI, like in Apple Core. And what the core numbers do, core PPI, I'm sorry, not CPI, PPI. Core PPI takes out food and energy because they tend to be more volatile. So the core inflation is an effort to look at what's more the underlying trend. Well, core PPI rose 2.8%. What made it even worse was this is after the previous month, August, had been revised upward. So without that August upward revision, September's would have been even higher. Does that make sense? That's one way. It's one way they can mute this month's increase by, in the fine print, increasing last month, because the numbers are reported as month to month change, and then you annualize it, turn it into an annual number. Well, CPI also has a core index, and the CPI core rose 3.3%. Again, after August had been revised as well. So this marked the 41st consecutive month that core has been above 3%. 41 months. Now keep in mind, this excludes food, which if you look at, items in the food basket, fruits were up 8% alone this month.
I know.
You're still seeing significant increases in food prices. Yes. And to help that out even more, the EPA last month announced rules that, in their estimate, could end up closing 53 meat packing plants and cost 17,000 jobs. So it's not hard for me to predict that there'll be reduced availability of meats and higher prices still. Thanks, EPA.
Yeah, the meats, I just bought some meat this today. It's crazy.
Yeah, how do they get people to eat bugs? They just make meat so high nobody can afford it.
Well, you're already eating bugs when you have the red food dye. Yeah. So, yeah.
I have actually eaten bugs, been in certain parts of the world where that is the norm. Probably a reason why I don't live in those parts of the world. Don't necessarily recommend it. But, I could hold a whole night session just on the trend, the pressures increasing to get people to eat bugs. Tyson's even opened up a bug producing plant.
No comment. Because we're already eating bugs, so it's in our food. So yes,
a little bit of it's in the food, a little bit of it's in some of the grains, the pepper, whatever. But it's
don't eat fig Newtons. Yeah, it's allowed. There's all kinds of stuff allowed in figs.
Such a small component, nobody really notices. Versus getting a whole platter of fried bugs. Now, In addition, looking at, price changes for this past month, a lot of people are cheering dropping energy prices, down 5.6% this past month. Bad news is oil is up 10% just in the past week or 10 days. It'll go even higher when Israel strikes Iran. So, enjoy the cheaper gas while you can. Bottom line, there are a number of trends out there which is not what the Fed wanted to see. Even possibly presenting what I would call a worst case scenario. Economically, a worst case scenario being presented to the Fed. We'll talk about that more in a minute. Now, one of the other numbers, now I'm really talking about numbers that most people ignore, that the Federal Reserve pays a lot of attention to. The Fed doesn't pay that much attention to CPI. What they care more about is called trimmed mean CPI. Now, the graph you have in front of you shows CPI versus the trimmed mean. The red one is the CPI. The blue one is the trimmed mean CPI, which takes the most volatile, the 8% of the top, 8% of the bottom, and cuts that out. So it's getting rid of the extremes and trying to focus more on what's the core, the underlying inflation rate. And you can tell generally it trends below CPI. But recently, past several months, it started moving higher than CPI. That's never a good sign. Now, if you look at the graph, the trimmed CPI, it seems like it's got more fluctuation, which, kind of strikes me as a little funny when I'm telling you it's less volatile. But part of that is the visually how it's reported. Oh, I'm sorry, I thought you were going to say something. Now, looking at the components, trying to get this loaded up here. Looking at the underlying components of the trimmed mean CPI, part of the beautiful thing is that these are the different components. Nearly 50% of the components in this index are still running higher than 4% annualized. So if we look at this, now can y'all see? Let me try to make this a little bigger. Is that better?
Yes.
All right, you've got a couple things that were negative, like motor fuels down 40% annualized for the month. Fuel oil obviously also is down 30%. But look at the other items that are down. Lodging away from home. How many of you do that? Infant and toddlers apparel. Okay, a few. Medical care commodities, communication, tenants and household insurance, recreation, process for fruits and vegetables. Those are all the negatives. Now, some of the ones that are near zero, non-alcoholic, tobacco, alcoholic beverages, dairy, new vehicles. So, a lot of the things that are negative or very low are things that people really don't buy every month. Now, if we start looking at the things that people buy every month, let's look at the change in those. Cereals, 3.6. Food away from home, no. Owner's equivalent rent, up 4.43%. This is in the South. You've also got a separate number for the Midwest and the Northwest, 5.7, 5.5. Owner's equivalent rent. That is actually the Bureau's housing number. So they have this wanky formulation where they take rents, they take changes in mortgage payments, and they calculate this percentage. It's called the owner's equivalent rent, OER. So that's up at an annual rate of, 5%. Keep going. Energy services, medical care, 8%, water, sewer, trash, 9%, education, 10%, meats, 10%, motor vehicle parts and equipment, 10, fresh fruits and vegetables, 15%, motor vehicle insurance, 15%. You know, the things you tend to buy more of are still jumping pretty good at a pretty high rate. So even the overall rate is lower. You know, motor fuel and fuel oil were a big component to that. Well, that's going to reverse this month, possibly significantly. The rest of the components are running high. Now,
I could see lodging because the holidays are coming up.
yeah,
Of course,
lodging away from home, but that's for most, you know, a lot of people have quit traveling, have quit eating out. They simply can't afford to as much as they used to. So, you know, if you've got recreation, you've got lodging away from home, you know, some of your fuel cost, that cost of eating out, all of those, while they may be decreasing or increasing slowly, to me, that really doesn't impact most individuals now.
Well, Thanksgiving dinner's coming up. I can't imagine how much that's going to cost this year.
Hot dogs are probably a little cheaper. Oh, wait, that was last year. Do you remember
Yes.
Biden's ad? Thanksgiving dinner prices decrease, and they showed hot dogs.
Yes. We eat hot dogs for Thanksgiving.
Have you ever in your life known anybody to eat a hot dog for Thanksgiving?
No.
I can't say that I have either. I think that
Turkey,
ad is priceless.
goose, chicken, ham, but never heard of hot dogs.
Never heard of hot dog. Yeah. Even if I've been by myself and I go out to eat or something, I'm still getting turkey just for the hell of it.
I know. Even Spam makes a little turkey. They have Spam turkey in little cans. It's actually pretty good.
I will take your word for it.
For one, it's good.
So when we see what's, some of these underlying factors that are persistent, having persistently high inflation, it's why, inflation is still hanging around kind of like a smoldering fire underneath a calm surface. And this is where things get tricky. A lot of those increases are coming from services, things like rent, medical care, other essentials that people will, buy every month. That's the problem, is that even though the reported rate may be lower for the actual individuals, the rate is somewhat higher. And keep in mind, a lot of people talk about, inflation has fallen. Technically, that's not correct. Inflation is an increase, and an increase doesn't fall. The rate of increase has declined, but it is still increasing. That's the problem. Now, looking at what contributes to inflation, this is kind of a breakdown, and this will vary depending on the season and the year. But if we look at, the general services is the big component, 40%. And services is like healthcare, housing, education, car repairs. All of that is still heating up. Housing is the biggest component. If you've tried buying a house or renting a home recently, you've felt this firsthand. Rent prices are rising at a steady clip and aren't showing any signs of cooling down. Shelter costs make up a substantial portion of inflation metrics, and it's proven kind of difficult for the Fed to rein them in. And it's not just that housing prices are going up. Housing inflation tends to stick around. Gas prices will kind of rise and fall depending on what happens to the price of oil, but housing prices are sticky. once people think their house is appreciated, they don't want to sell it for less. They'll even take it off the market rather than sell it for less unless they have to sell it.
Right.
Now, in many locations, housing prices are falling. Austin, Texas, Florida is going to just croak here before long.
I agree.
Particularly with the two hurricanes hitting it. There was already a lot of people putting their houses up for sale in Florida because they couldn't get homeowners insurance. I wouldn't be surprised, but over the next month or two, that almost every company backs out of Florida. They just cannot afford the losses they're incurring there.
So how do you handle that? How would Ron DeSantis handle that if there's no insurers in Florida? Does the state government take that over?
I honestly don't know. That would be a huge government intervention that the government's really not prepared to do. Because, what were the estimated losses in Helene?
It's astronomical.
50 billion. I don't know.
I think it's more now if you're taking in the whole scope of it.
So where does the state of Florida government get $100 billion to cover the losses? The risk to the government is inordinate.
Right. I'm listening.
So, if all the insurance companies pull out of Florida, I honestly don't know what the solution is. Mortgage companies require insurance.
Yeah.
So, do they start foreclosing on people who can't get insurance? I think probably the first act is the state will implement a moratorium on foreclosures.
But who would buy it? If you can't insure it, why would they foreclose rather than still get a payment on it? So
just process. It's what the contract calls for. So they have a legal obligation to do it because they are just okay. When a bank issues a mortgage, they don't keep that mortgage. It's not theirs to decide what to do and when to do with it. They actually sell it to a trust. That trust will take that mortgage, combine it with another 1,000 or 10,000 mortgages, and then securitize that. Sell it like a bond in the market.
Right.
So the bank, you're still making payments to the bank, but the bank's just servicing that loan. They get 0.25% of the payment to handle the servicing.
Wow.
But in terms of what they're required to do and how they're required to handle it, that's all spelled out in the contract when they sold that mortgage. And if there's a default, I'm 99% certain they're required to foreclose. So to me, probably the first option would be for the state of Florida to declare a moratorium on foreclosures, which probably the banks and most investors would want. Just saying.
Yeah, I would think they'd want it too. If you have that in your portfolio, your 401k or your retirement portfolio, that they've sold that to you. You don't want it to foreclose.
No, you'd rather have those people making some payment, even if it's only a partial payment, or, some people will still be able to make the full payment while they're getting their house repaired. Some people's houses have no damage. They'll keep making the full payment. Right. So, if I owned one of those mortgage-backed securities, I'd be like, hell yeah, don't start foreclosing. That's just a road to disaster.
It is. It's just another collapse. Did you see Thomas Massey's teach Congress about inflation?
Yeah, using the tea glass.
Yes.
I like old Massey. I do.
I do too. He's hilarious. Oh, did you
want character.
To back now?
And I'm glad to see he's back working, being his Thomas Massey self. I wasn't sure how the loss of his wife would impact all that, but
I don't think they know how she died yet. I mean, they said they didn't know. So
yeah, he hasn't released it. He never talks about it. But he, some people think that maybe there was something nefarious behind it to try to control him, but he's being the same old Massey.
Oh, I
Nothing
don't
has changed.
I think he's one of the ungovernables. I mean, he lives
Yeah,
off grid. Like you pay your taxes on your house, but he's ungoverned. I mean, he grows
yeah.
his own food. He has his house off grid. He owns, the mineral rights under his house. I mean, unless he's doing something he shouldn't, like going to the white parties or something, I think they don't really have much on him.
No, no, I don't think so. And so good to see him back. Now we're talking about rents and home prices will crash. But does that mean as a renter, you can probably expect your rent to drop?
No.
Probably not. Uh, the particularly if you have a long-term lease or if you can't move. Now keep in mind that, repairs, insurance expenses are still rising, taxes, property taxes are still rising.
Oh, I know.
The Yeah, the paper value of the property may decline, but the costs keep increasing. So, I seriously doubt that the loss in property value is really going to impact rental prices a lot. Um, what will impact it is if there's a lot of open rental property.
Right.
In Austin, a lot of people are fleeing Austin. A lot of people have been fleeing the Bay Area in California. And with, a wide availability of rental units, no demand, that's when you see prices start falling for rent. But otherwise, wouldn't expect it. So there's still going to be pressure on housing costs going forward.
So my question is, what happens if the renters are paying, but for whatever reason the owners don't pay and it's foreclosed? What happens? Do the renters get kicked out too, or does the bank try to keep them, or how does that work?
It depends on how the contract is specified. I've known it to happen both ways. Whoever picks up the contract is buying the apartment unit relatively cheap and they want to keep the renters. Some are buying the apartment unit so they can have and control the property. They want to level all the units, build bigger units, build more expensive units, turn them into condos, whatever. So I've seen it go both ways. It will just depend on the terms and agreement you have with your rental agency. Now, they cannot force you out of your contract prematurely, but they don't have to renew it. And that's usually where
Let's say you have a 5-year rental agreement. No one usually does, but 5 years, and 2 years into it, they buy it. They have to let you stay the other 3 years then.
yes, in most jurisdictions that I'm familiar with.
Okay, that's interesting.
So, excuse me. Don't expect, a great decrease in rents or housing costs per se anytime soon, with certain exceptions, Florida being one of them. How about wages? Hadn't even talked about wages yet, being a contributor to inflation. Now, across many sectors, wages have been increasing, especially in service industries like healthcare and hospitality. If you've gone out to eat at a fast food restaurant, you probably had some sticker shock at the prices.
Yes.
Yeah, it's not only their costs for meat and bread have gone up, but their labor costs have gone up because they couldn't get people back to work. So they've had to greatly increase pay to try to get people, back to work. Now, and that's most critical in industries where there were labor shortages during the pandemic. So that pandemic really screwed up a lot of things, the way we handle it, the lockdowns, et cetera, et cetera. It just reconditioned the whole economy. It led to greatly higher pay scales, and which contributed to inflation. And we all like raises, even if they come, even if they come a year after prices have already increased. That's the
Right.
problem. That's one problem with an inflation hike is you usually don't get it till a year after you've already paid the bill.
Right.
But when businesses hike wages, they have to pass those costs on to the consumers. So while it's good to see paychecks rising, it also means the cost of goods is going to be creeping up alongside of them. Now, keep in mind that the average raises haven't kept pace with inflation. So I present to you what I call an illusion of a hike. You'll hear a lot of people talk about, hey, looking at the blue line, how wages have gone up since 2020. Only problem is, once you adjust those wage hikes for inflation, if you look at January, end of 2020, November, December, January, you can see that your wages on an inflation adjusted basis are lower than they were in 2021. And this is based upon the CPI, which I argue is a crappy number. It doesn't really reflect the actual and true nature of inflation. So, yeah, wages have risen, but not enough to even keep you even with where you were in 2020, 2021. So knowing that wage hikes increase inflation, I'm just kind of curious. How many of y'all are willing to take one for the team and forego wage hikes?
I think
Do it
companies
for the
are,
country.
I
Do
think
what?
companies are, I think companies, as we're going through the budgets right now, aren't budgeting for much of a wage increase next year, at least the ones that I've
Yeah.
talked to and other people in finance. You're lucky if you get a 1 or 2%
Percent
increase.
increase. Yep. They will use CPI, and a lot of them will, keep it a little bit less than CPI. So, and part of it also is that there are some big issues in the companies, in the economy. Layoffs are starting to increase, job openings are decreasing, falling. There's some big strikes coming up. Boeing right now, its workers are striking, and it just yesterday or 2 days ago announced a 10% layoff of all workers. We already talked about the longshoremen delaying theirs till January. It's still on the agenda. We've not even begun to factor that into inflation yet. Energy. I always talk about energy because energy underlies everything. It underlies the transportation of goods like food. It underlies, our heating and cooling, our lighting. Energy underlies every bit of production. Well, we have seen cost spike the last 4 years. Now, this graph goes back to 1998, and you can tell from, 98 to 2002, 2004, they were, it was relatively flat. You saw a little bump pre-subprime crisis. Then from the subprime crisis through pretty much 2018, 2020, it was a steady but not rapid increase.
Yeah.
But notice around 2021, prices just go exponential. A lot of different factors to this, and I won't get into those, but it's easy to see that costs have spiked the past 4 years and are likely to continue to do so. Concerns of the future energy supply. Now, I've said repeatedly, you cannot have a prosperous economy. You cannot have a growing economy without cheap energy. You as an individual, on average, cannot prosper without cheap energy. Your opportunities are reduced. your expenses are higher, you can save less. There's just multiple consequences on down the line. And and recently, just in the past 6 months, a lot of companies, particularly as AI started, growing, and people are realizing the demand for electricity that AI and EVs are going to bring to the grid. A lot of people are starting to get a little panicked about future energy supplies, to the point where there is now serious consideration of opening closed nuclear plants
Oh,
like
they're going to restart 3 Mile Island,
Three
which
Mile
is
Island. Yeah.
not too far from me, and they're going to restart that. They have to restart it as so yes, there's a lot of energy that they're going to try to restart.
And
But
this at a time when they're trying to kill natural gas and coal plants.
well, I just want to know how that EV helped those people hit by Helene.
you know,
I mean,
the,
even now, let's say your EV made it through the storm, right? Okay. How's it going to help you? When is I mean, I have friends that were impacted in Tennessee, and they told them it could be months. And some people might, if you're way back in there, it might be a couple years before they can get power back to you. Because one, they have to build the infrastructure first, because Route 40 is gone and all the little back roads are gone. How does that impact as they have to rebuild the lines and rebuild the grid? Does that have a direct proportional impact to what you're showing here?
it will. The grid has been woefully neglected
Oh,
for decades. So there's the maintenance cost that has been deferred, not to mention needing upgrades and you know uh, more ability to transfer energy because of the demands of EVs and these AI data centers. And some states like California have waged a war against increasing energy supply. They've had to import energy for several years, and states are going to have less and less energy to export. So what does that do to the citizens of California? They've already in many areas experienced brownouts, repeated brownouts. That's probably only going to get worse. There is no way to rapidly increase the supply of cheap energy. So
I read somewhere, and I can't remember where, is that the people that originally designed the grid were the boomers, and that the younger people never really learned. So that if we had a catastrophic grid and had to rebuild it, there's not really many people left that would understand how to rebuild the grid.
and you look at the trades like electrician and line workers and all, most of those are aging. In the trades, I saw where for every 5 that retire, only 2 replace them. That is a recipe for disaster. In
Oh,
home construction and, like you say, for electrical maintenance and updating, improving the grid, repairing the grid, all sorts of things. So you look at the way energy prices have increased, and, bless their hearts, you see these little dotted lines. This is the estimate from the U.S. Energy Administration.
oh, well, okay.
Yeah, down south we have a saying, bless their hearts. That's really all. That's really all I can say here. There is just no way in hell that this happens unless energy demand collapses. Which, if
So,
we have a severe recession, that could happen.
well, isn't Elon Musk building a gigawatt plant or something like that down in Texas?
He is.
AI.
OpenAI is building, bunch. All of these Meta, they all want to build these data centers, and the data center is a relatively huge warehouse
Right.
of computer processing power, but each data center will consume the energy of a city of 250 to 500,000 people. Just absolutely massive energy demand for each data center.
Wow.
So we've got 2 choices. Either we can't build data centers, or we have to increase the supply of energy, aka 3 Mile Island, restart old nuclear plants that are shut down, extend the lives of nuclear plants that are about to shut down. None of that, which is going to be cheap. And we haven't built a new nuclear plant since, what was the one in Georgia? Took 20 years to complete, 30 years to complete.
Yeah, I can't remember. I only know
Yeah.
about, I have two of them near me. So, yeah.
Yeah, the Vogler. Yeah, Vogel. It was completed 10, 15 years ago. And, we haven't started a new nuclear plant in 30 years. Now, there's some potential new designs out there which could be far simpler, far cheaper. Some of them are undergoing trial runs, tests, so we'll see what happens. I'm always hopeful that technology and innovation can still offer a better future, but there's so much obstacles to nuclear power just because it's nuclear power
Right. What
that
I mean,
you got to wonder what the
Fukushima.
EPA and
Yeah.
the Energy Administration are going to try to do to obstruct it. I don't know. Just don't know.
Well, I'd be worried about it too. I mean, something catastrophic happens. Then what
Yeah.
happens? Now everything around it is just contaminated for what, thousands of years, right? So where do we put these, and where is there not, you worry about now when you see these catastrophic storms coming through, and how would they weather these catastrophic storms that are coming through?
Well, they actually, like when they were building the containment domes, they
Hmm.
actually build them to withstand the impact of a commercial jet hitting them. So in terms of, hurricanes, I think that would probably be, a relatively safe concern. In addition, the worst disaster we have had is
Renown Island.
3 Mile Island. But there was no, if I remember correctly, there was no radiation leaked.
No, there was none. It was human error. They found
Yeah,
later that if they had just let the machines do what the machines were
she
do, they would
did.
have been
Yeah.
okay. Yeah, I was in school here, and I remember them
Yeah.
telling us, "Get under the desk," and I'm like, "What is that going to do if it?" I'm going to be like,
Radiation doesn't get low enough to get you under the desk.
my
So,
father's like, "Just look out the window and bend over and kiss your dupla goodbye," because
yeah.
nothing.
Fukushima was wholly human error
Yeah,
and pride. I love the Japanese culture and people, great people, but they have a very, very intense pride. And I have a friend um, who is or was high up with a major nuclear company here who was actually called in to Fukushima as an expert to try to come up with a solution. Well, he was contacted, 2 months after it began, month after it began, when it was too late.
right,
The Japanese, their pride didn't want to ask outside expertise. He said it could have been contained and limited and stopped. I'm not a nuclear guy. I can't say,
right,
but human error, Chernobyl, bad design, human error.
right.
So US plants don't, and particularly with some of the new designs, I just it's a trade-off. Do you want to
Right.
not have energy, or do you want to take a 1 in a million risk? I don't know what the odds would be if it's even that low. Um, so energy, I'm pretty certain that energy costs are going to continue jumping.
Even with a change in administration.
Yeah, it's going to take a decade to get some of that worked out.
Really? Okay.
Yeah. There is just no quick fix on the horizon now, and a change in administration could remove some of the regulatory obstacles at the EIA, the Energy Administration, the EPA,
Hmm.
to um, both adding on, expanding natural gas energy plants, restarting those, restarting and extended the life of some of the nuclear plants. Those are all stopgap measures. We need new energy generating plants long term. So that's the part that's not going to be a quick fix. We need the grid upgraded. That's not going to be a quick fix. I was listening to Elon, and he was talking about building this gigaplant with its own energy supply.
Yeah, that's what I was referring to. Yeah, he wants his own energy supply.
Now, I don't know if he was talking about nuclear, building one of these little nuclear plants, or solar. I'm not sure. But that probably is a more reasonable outcome, is that these huge data centers could somehow be licensed or permitted to have their own energy generating plant. That way they don't have to, they don't have to go through major updates of the grid. They don't have to add, a state or the energy company doesn't have to add a new plant somewhere. That would reduce the stress on the overall grid. Now, this time around, inflation feels a little different, at least to me. It's not just because it's not a supply chain issue. It's not just toilet paper shortages and microchips stuck in cargo ships offshore. This time we're seeing inflation driven by other culprits. I hope everybody understands that now. So what's next? And this is kind of the tricky part, because the Fed has been on a mission, so to speak, to tame inflation. And here's the rub. While they've made progress, core inflation, particularly in housing and services, remains sticky and high. Even if inflation's at, 2.8 or 3%, that's still 150% above the Fed's target.
Wow.
At 3%, inflation is still running high. So the latest numbers that we've seen, that some of which I've shared with you, indicate that the Fed's job isn't done yet. So the real question is, does the zombie get back up? You've seen the movies. You kind of know what's coming, don't we? While headline inflation has cooled, core inflation, particularly looking at some of the numbers in the trimmed mean CPI, are increasing and increasing rapidly. That leaves the Fed in a very sticky, a very difficult position. Do they go back to raising rates, knowing it could crush the markets and hurt any chance of economic growth? Which, people go, GDP has been growing, so the economy is growing, all is well, great economy. That, how do I put this? That's just not reality. If you look at the components, what is increasing in GDP, it's government hiring. If government wasn't hiring so many people, the unemployment rate just this past month would have increased from 4.1% to 4.6%, just off government hiring alone. The private sector has not been hiring. The private sector has not been increasing, unless you include part-time jobs. So the Fed knows this. They don't admit it, but even Powell at times has questioned the BLS's and the BEA's data, Bureau of Labor Statistics, Bureau of Economic Analysis. They're the ones that produce the payroll reports, the GDP reports, the numbers. Powell has even questioned the accuracy of their numbers. So if you're the Fed, do you wait and see if inflation naturally subsides? Do you pull the word transient, out of their closet of famous expressions and put it back in use?
You look at the 70s, right? We had that great inflation in the 70s. And what did they have to do to dig us out of that was they had to raise the rates. I don't see now how they can say they're going to drop percentage points. I mean,
Yeah,
it took what, 10, 15 years to dig out of the 70s.
yeah, and I had a graph. I didn't use it. I may try to pull it up some other time, but it shows the inflation in the 70s. It rises sharply, then drops down low, and then the zombie rises again. And that's when Greenspan takes office and hikes interest rates to 15%. You know,
Didn't
people were
Paul,
complaining.
didn't Paul raise them first?
No,
Paul.
I'm sorry, not Greenspan, Vogel.
Yeah,
Paul
right.
Volcker.
Keeping you
Volcker
honest.
raised them.
Keeping you honest.
Keep me honest.
Yeah, he raised them a
Yeah.
lot.
The guy before him was Arthur Burns, and Arthur Burns was the one that cut the rates before inflation had actually been tamed. So if you take this current reign of inflation and compare it to Arthur Burns' first gap, when inflation peaked, 10, 12%, and then dropped down and then turned back up, we
I
are
think
plotting a very, very similar course.
I see it. I think things are cyclical, I think we're seeing that. And I think the only way you dig yourself out is, unfortunately, the interest rates have to go up to dig us out. And you're right. This is how long did it take from the 70s? 10, 15 years to dig ourselves out of that level of inflation?
It did. And, Volcker had to hike rates to 15%, nearly 3 times what they are now.
Yes.
And, I was talking about the Fed, how they're in between a rock and a hard place. How do I say this? The growth in government employees, which also really includes healthcare, because government pays for the majority of healthcare.
Right.
And, people want to argue that GDP, is good. Well, just imagine if 100% of all jobs were government expenses. 100% of everybody working, was either on the government payroll directly or working in a area that was paid for by the government, like healthcare. The only source of revenue would be printing money. So what happens when government is 100% of the economy? What do you think happens to inflation when the government has to print money to pay its bills? Right now, government is about 40% of the gross economy. And we saw what happened when the government turned on the printing presses for just 6 months or a year. Inflation just blew up. What happens when they do that again? And they will have to do that again.
Yeah, I just sent you the chart from the Federal Reserve history where you can see the inflation and the percentage in the private chat. I think that's what you're referring to. There we go.
Here is what I was talking about with Burns. Inflation rose, came down, spiked again. He got it down, started cutting some rates. And then Volcker takes over somewhere around in here and jacks the hell out of rates. And that finally starts bringing inflation down. During the 80s, I bought my first house. My mortgage was 12%. What would happen to housing demand if mortgages went back to 12%? People would just roll over and die.
It's going to have to happen.
Yeah, it's very possible. Now, the Fed knows this, and therein is their dilemma that I've talked about. Since 2019, we've seen government debt soaring. not total spending, just the debt. We have since 2019 added about $12 trillion in debt, federal government. That doesn't include state debt. The economy over the same time frame has grown by about $3 trillion. So we've borrowed 12 trillion to get the economy to grow 3 trillion. Does that sound like a good trade? The key is that the more government borrows, the more government spends, the worse the economy gets. So what we're leading to is a stagnant economy. A stagnant economy means less opportunity for individuals to improve their situation. A stagnant economy means more individuals dependent on government spending. It's a lose-lose situation for individuals and a win-win for politicians because they get to increase their power, they get to increase dependency of people on government, which makes people more willing to vote for more government. You know, just think about it. If you're getting paid by the government, you want your pay to go up, just like, you know, somebody in the private sector wants their pay to go up. Only problem is ultimately that's a house of cards and it will collapse and it will collapse ugly. Jobs in the economy now are worsening. The jobless claims, new claims for unemployment just increased by 258,000 last month. And that's really pre-hurricane numbers. We just saw 2023's payrolls revised downward by 1.2 million jobs.
Oof.
So the BLS, when they were reporting new jobs, new payrolls every month, they overestimated those monthly numbers by 50%, 48, 49, roughly 50%.
Wow.
So far this year, in 2024, there have been about 550 major company bankruptcies, the most in 15 years. Federal debt's about to hit 36 trillion. They just announced that this fiscal year for the government, which ends in October, will have a fiscal year deficit of $1.8 trillion.
So could they do something like the omnibus that Clinton did to bring that down? Or do you think we're just past the point of politics where they would do an omnibus budget reconciliation act?
It all, you know, the only way to get that down is to cut government spending, period.
And that's what they did during Clinton
Yeah, that was actually the Newt Gingrich, what was he called? Contract for America. The House passed the bill, the Senate passed the bill to cut I say cut. It didn't really cut government spending, it froze it. And so this was in 1992. And 1993. And so, yeah, the election was in 92.
Right.
They took office in 93. And so government spending increases were capped. And by the end of Bill Clinton's term, that reduced expenditures combined with the economy growing and increased tax revenue led to the quote unquote balanced budget by the time he left office.
Correct.
So I guess that is my hope. I hope it's not too late for that. And I hope something like that can be done. It's not that, and to me, there's still a lot of government that could be absolutely cut. That's kind of why I'm somewhat hopeful Elon gets his opportunity to try to make government more efficient, which, you know, he has certainly done with Twitter.
Oh, what, 80% of Twitter?
Yeah. And it runs better than it ever has. So I always have hope, but we're running out of time. Not going to lie.
Yeah. At what point is it the point of no return? Because I think we're almost there. I mean, getting to Venezuela at this point.
Yeah,
Or
mighty
are we
damn
there?
close. You know,
I
like I
feel
said,
like we're almost there.
the debt's running $2 trillion a year. This year, interest expense will be $1.2 trillion. So we are borrowing money to pay interest. That's third world nation stuff.
That's correct.
That is a recipe for disaster. And if you look, people go, "Oh, well, the stock market's up. Everything's fine." Well, the stock market and the bond market have a great disagreement. Now, my background's in the bond market. And so I have a preference for bond market, particularly because I think it's a more sophisticated market. It's a more complex market. You have more sophisticated investors who are more forward looking than they are in the stock market. Now, this graph, I know this bottom line is hard to see, but there's kind of a gold line here. This is where interest rates were a month ago when the Federal Reserve cut interest rates. This bold green line you see is where interest rates are now. And as you can tell, interest rates have risen since the Federal Reserve cut rates. This is the bond market saying there's major problems out there. Basically, the bond market is saying that we expect higher inflation. We expect higher U.S. debt issuance. I don't know how many people out there follow currency, but the yen is collapsing again.
Yes.
And remember when the yen hit 160 to the dollar, the BOJ hiked rates and you had that drop in the market. A lot of people were, it's popular. We even talked about it some, the yen carry trade. Well, there's still a lot of that out there. Not to mention, if the BOJ hikes rates again, it's going to encourage even more Japanese investors to leave U.S. bonds and invest in Japanese bonds. So you see investors in the U.S. bond market demanding higher yields. Remember the teeter-totter? As yields go up, the price of the bonds fall. So Treasury bonds have been absolutely puking over the past couple of weeks. I mean, normally the bond market's pretty stodgy. But there have been some days when the 10-year bond has moved, 10 basis points, 7 or 10 basis points, which is unheard of. So the Fed, what does all this mean for the Fed? For the future? The Fed is being faced with the worst possible of all worlds, a stagnant economy and higher inflation. If it hikes rates to try to tame inflation, well, one, it looks stupid for cutting rates so quick. And it will absolutely level the stock market, and it slows the economy further. So hiking rates slows the economy even more than it is now.
Didn't you say Warren Buffett on one of your shows has more bonds than the Fed? Didn't you say that?
More short-term treasury bills, yeah,
Okay.
or T-bills. We'll actually talk about Buffett in a second.
Okay.
If they don't hike, I don't think the Fed's going to cut rates again, not anytime soon. I think this month they'll take a pass. So if they don't hike, inflation continues its rise and the Fed still looks like an idiot.
Yes.
If the economy slows further and the Fed tries to pump more liquidity, give out more free money, then you'll have higher inflation with it. Remember, it was the previous liquidity programs, the previous stimulus programs that caused the housing bubble, the stock market bubble. It's what got us into the mess we're in today. And Powell has admitted that. So what's the Fed's option? They can't hike rates, they can't cut, they can't stay where they are. Their only real option is to follow their knees and pray. What else do they do? They're screwed if they do, they're screwed if they don't. Now, you just mentioned Warren Buffett. obviously the founder CEO of Berkshire Hathaway, the investment management firm. Warren Buffett has sold off Apple, sold off Bank of America, which looks like it's going to be a very distressed bank before long. Buffett always does things for a reason. If he felt like Apple was a value, he'd still be holding it. If he felt like BOA was a value, he'd still be holding it. But he is dumping BOA, dumping Apple, dumping a lot of companies. Currently, Berkshire Hathaway has $280 billion with a B dollars in cash, short-term treasuries. They hold more short-term treasuries than anybody else in the world.
Don't they hold more than the Fed holds?
They hold more than the Fed. This is a record high for the company. And the cash position right now is 25% of its total assets, which is the highest it's been in 24 years. Buffett has been selling more securities than he's been buying for 7 quarters in a row. Now, there's kind of
liquidity help him when our dollar's going to tank or is tanking.
Well, there's a couple different ways to look at that. One would be that he is expecting a major correction in the market, and he thinks he'll be able to buy stocks cheaper. So he's keeping his powder dry, so to speak.
Okay.
And, one index, this is actually an index he came up with. Let me see here if I can get this.
There we go.
This is called the Buffett Indicator. And it basically takes the Wilshire 5000 and divides it by GDP. And right now, this ratio is at 200%, which is the highest it has ever been. Now, why this ratio? This basically is looking at the value of the companies that produce and the value of the economy they produce. And if you look at it, the mean here historically is around 85%. Right now it's at 200%. The key for this index, if it is 1 standard deviation above the mean, the market is overpriced. If it's 2 standard deviations above the mean, it's way overpriced. Right now, it's 2.5 times the mean, 2.5 standard deviations above the mean. So looking at, one of Buffett's historical valuation models, the market is grotesquely overpriced. Hence, maybe one reason why Buffett is holding so much cash. So you've got the Fed praying for a miracle. The likelihood of inflation increasing is strong. The economy is slowing down. The private sector, anyway. Government is just going great guns. China's economy has been collapsing. Japan is seeing inflation spike, so they're likely to hike rates again. Their economy has been relatively flat or stagnant for a while. France, Germany, UK, Italy are all stagnant or just right on the edge of recession. So all of the major U.S. trade partners are screwed. They're all stagnating. They are not going to pick up demand for U.S. goods anytime soon. They are not going to be buying U.S. bonds anytime soon. So do we think interest rates will still drop? Mortgage rates have actually increased the past 2 weeks. Yeah, there's a lot going on out there.
I think it's going to get back like before, up to double digits mortgages. I mean, people still bought, though. Maybe not as many, but people still bought when it was, you did. Lots of people bought when they were double digits. And, even in my 20s, your 30s, people were paying 7, 8, 9, 10%
Yeah.
interest on a mortgage, and nobody thought anything about it.
I think the key is one of my favorite authors is J.R.R. Tolkien. And he once said, a single dream is more powerful than 1,000 realities. Perception is everything. Back when I took my 12% mortgage, I was used to one, a 7 or 8% mortgage. That was the norm. And
Right.
two, the current mortgage rates, this was an owner finance deal. The current mortgage rates were 13.5%. So it was a tad under that. So, went ahead and did it. Obviously, when they fell, looked to refinance or actually sold the house before that. But anyway, the problem is that people now have been so conditioned to 3%, 4% mortgages that a 6 or 7% mortgage looks obscene. They have sticker shock when they see the mortgage rates. They don't really have the perception that that's the historical average for
Correct.
mortgage rates.
Correct.
So attitude and perception is big. They're still believing that mortgages ought to be 3 or 4%.
They can dream.
They can dream. It'll be a hell of a dream.
It just can't happen. We see it.
Yeah. So, if I look at all these things, all the major trends are in the wrong direction.
Correct.
This, while the stock market is hitting all-time highs. Now, the stock market is basically hoping for QE 1000, more free money printed by the Fed. If that happens, then like I've said before, it doesn't matter what the economy does. The economy could absolutely crash and the market would still go up because the Fed is pumping so much money into the stock market.
Right.
They are the 800-pound gorilla if they do that again. Now, Powell has repeatedly said he won't do that again because he understands that that's what got us in the current mess and
Correct.
that the market probably is already overvalued.
You think?
And I saw somebody comment, I really do. I saw somebody comment that 2008 broke the stock market. It broke free markets. It broke capitalism. And unfortunately, I kind of believe there's a lot of truth in that statement because the markets got so addicted to the Federal Reserve pumping liquidity. I mean, one year the GDP was down, what was it? It was down 1.5%, and the market still went up 40%.
It was insane. It was
yes. That just defies logic if you believe in valuations. If you believe in paying for future cash flows, it's nuts.
I believe in rainbows and unicorn farts. So yeah, let's bring it on.
But if the Fed does start pumping money again, I'm my
Who's
ass is
not?
in the stock market. Yeah.
We're all in.
I'm jumping on board.
Who isn't going to jump on the train?
Exactly. But believing that Powell won't do it, at least for now, I believe that ultimately some of this excess has to be purged and that there will be a purge and it will not be pretty. The bond market is, as I pointed out here, is already anticipating it.
Oh yeah.
We shall see. The timing is unsure, but the reality is not unknown. It is not unknown. Maybe I said that too fast. We know what's going on. We can look at the trends. We can see how in history they've responded, though it's not always been immediate. Like I say, I can't predict the timing, but I'm still very cautious. I'm not offering investment advice, but I'm just telling you my view, what I think. Some risk assets like gold might be very attractive going forward. Just food for thought. Bonds probably.
You couldn't eat gold, so why would you have gold? It's only a perception of it having value. What
it is?
What true value does it have? You can't eat it.
Absolutely. And so that kind of depends on how bad you think things are going to get. if things actually go to hell in a handbasket,
We know what's more valuable than gold.
yes, there is one metal that is the ultimate in value. That would be lead in the
Correct.
form of fast moving little pills. But that's the
I
kind of
mentioned lead before I would gold.
but that's if things really, really go south. If there is just a major market correction, then gold likely will perform well. So it really depends on how bad things get. We shall see. Anybody now? I have done most of the talking. Anybody have any questions? Everybody's been kind of, quiet, and I feel a little guilty for gabbing so much. If there's something I've said that hadn't made sense or something you've got questions about, please, feel free to ask. This is
questions in the chat. I've been monitoring it. So
yeah, this is probably the quietest we have ever had the crowd. We appreciate y'all watching. Appreciate you being here. But if you've got some questions, throw them out.
They know I'm giving you a run for the money tonight.
True that.
You got another finance person on the stream today.
Appreciate you being here very much so.
No problem. I'm enjoying it.
Gimme. Now, we also, want to throw out some of the latest on FTX. And I gotta just say up front. Cheerful. I think we are all just stunned.
Stunned by how bad the market is,
or by the potential, I guess. I want to try to turn that into some positive. Again, these are my thoughts, my perspective. I offer some evidence why I believe that, but it is something that I think people need to be more aware of. You can hear all the positives you want, the market's at all-time highs. Yay, all is well. Economy's going great. You don't hear the voices in the wilderness. And so I guess that's kind of where I see my role, is trying to be that voice in the wilderness that's saying, hey, there's some other reality out there that you need to be aware of. You may interpret it differently than I do, and that's fine. My goal is to just get you thinking on some of these things that other people aren't thinking about, and to help you be more aware than other people are. Janine, I'm here listening, but too much going on to chat, enjoying the conversation. I appreciate that. Thank you very much. Stunned by the potential.
There could be potential, yes, in this market.
Yeah. It'll, we will see. Again, my crystal ball is not perfect. And in terms of the timing, there's just so many things that could kick off a significant correction.
I'm not seeing it. I'm not seeing it in there. Yeah. I'm very good at doing accruals at work. So the one place I worked at got me that, because they're like, how did you know? I'm like, I know everything.
I know these things. Oh, who was the guy on Game of Thrones? Tyrion. Did you watch Game of Thrones by any chance?
I did not watch Game of Thrones, no. But
I love the series, but there's a dwarf in there. I don't know his real name, but he was a brilliant guy, portrayed a brilliant guy, whose obviously intellect overcame his physical limitations. But he had a saying. He said, "I drink and I know things."
That's me.
I even thought about having a T-shirt made with that on it. I drink and I know things.
That should be my motto at work. They always ask me, how do you know? Oh, here we go.
Yes, Tyrion Lannister. I just can't think of the actor's name, his proper name. But it was a great role, and he was extremely well cast in that role. Did it perfectly. FTX. I got to just start off saying I'm terribly impressed with John Ray. I mean, he had a pretty damn good resume. He handled the Enron bankruptcy, but his work in overseeing the FTX, Peter Drinkage, yes, however you pronounce that,
Thank you.
Drinkage,
Thank you, Cheerful.
outstanding. Thank you, Cheerful. He has overseen the FTX bankruptcy, and he's done far better than I thought possible.
Me too. That's amazing how much he's.
Yeah. $30 billion company, millions of customers, billions of transactions, files kept only on QuickBooks and even incomplete at that. QuickBooks, how the hell?
We know how I feel about that.
Yeah. He and his staff have reconstructed most of the customer transactions and trades, which is yeoman's work, and have recovered approximately $16 billion to distribute to investors. Now, like this article, a lot of people in crypto are thinking it's going to be this huge liquidity dump, and most of it will go to Bitcoin, Ethereum, a few other coins, and cause a major surge in the prices of Bitcoin, Ethereum, some others. And I'm like, not so fast, my friend. Excuse me. From what I can gather, probably about $5 to $7 billion has been paid out already for liquidity purposes, to cover other costs, to pay some debtors.
Right.
Now, out of the remaining part, and I'm not sure of the amount, but it will be a non-trivial amount, will be retained for tainted claims. Now, what's a tainted claim? It is a black box investor. It's some investor who put money with FTX that may be associated with a cartel, arms dealers, Russian, no KYC, know your client. And the U.S. brokerage firms and banks have a requirement, KYC, know your client. So when you open up an account, you have to provide a driver's license and all this personal information so they can verify who they are doing business with. Well, a lot of the FTX accounts don't have this kind of verification. So no KYC, they're not getting their money. Now, of the remaining amount, I don't know, $4, $5, $6 billion, whatever it ends up, I do expect to see a chunk reinvested back into crypto. They'll be paid out in cash. And probably a good chunk of that will go to Bitcoin or Ethereum. So I don't agree with the size, like in the headline here, that it'll be a huge liquidity injection. But it will be something. And based on, John Ray had a hearing earlier this month, and he was talking about paying out claims. And he basically indicated that claims less than $50,000 will be paid out sometime in quarter four, this upcoming quarter. Claims larger than 50,000 will probably be paid out in the first quarter, maybe the second quarter of 2025. So I'm thinking, and I have no real scientific basis for this, just call it a gut estimate, that $2 or $3 billion will end up reinvested back in crypto, and this over 6 months. So it's not a huge amount. You won't see a rapid surge, but it's not bad. And this will be on top of the current amounts being invested in crypto.
Now, you don't think people would be leery after all of this to put it back into crypto? I know Bitcoin's pretty stable, but don't you think there's a leeriness now?
To me, the leeriness is in a lot of the altcoins. Looking at Bitcoin and Ethereum, even with all the shocks and all the dumps and all the liquidity dumps that occurred, I mean, Bitcoin went from 70 to, 55 at a low. It's hovered around 60. It's back to 64 now today. And this with, Mount Gox released, I forget the exact amount, a ton of Bitcoin earlier this year that started the initial drop. You have FTX selling some of the recovered Bitcoin and raising the cash to pay out to creditors, et cetera. So both of those are done. So you had a bunch of extra supply of Bitcoin dumped on the market first part of this year, which that's done. That supply is vaporized now.
Right.
And Bitcoin held up fairly well. So I think if anything, that probably, and Bitcoin's, I can't say it's been around forever, but it seems like forever.
A long time. A long
Yeah,
time.
since started in 2009.
That sounds
And it's got a pretty distinguished record of, having some volatility, but pretty steady increases over any 3-year period, over any 5-year period. I think there's only one 5-year period where there's a loss. And you have to pick the right days, the right week
right.
to hit that window. So there are not many assets out there that you can say that about. So to me, that's made me even a little bit more confident in Bitcoin and Ethereum, maybe Solana. But the other 997 different coins out there, I'm a whole lot more cautious about. And particularly those out of the top 10, I think 80 or 90% of those will probably vaporize over the next 5-10 years.
I agree. Eventually, you'll have to merge it into one or two. I mean,
yeah, people will find, the market will settle on the winners.
Correct.
And unless somebody invents a better mousetrap, which between Solana, Ethereum, Bitcoin, it's kind of hard to see any great improvement coming up. But it's always possible. In 2008 and 9, I never imagined Bitcoin. So there you go. Also with FTX on the legal side here a little bit, their auditor, Prager Metis. Good old Prager Metis. How they are still in business, which kind of surprises me. I don't know how the hell.
I thought they would Arthur Anderson,
Yeah.
That's the one up for Enron, everyone, if you don't know.
Don't remember that, yeah.
If you don't
they should.
They should, yes.
Kind of like TD Bank. This week, the Attorney General of Garfield just announced he hit TD Bank with a $3 billion fine for laundering cartel money. Well, I thought laundering money was a felony. I thought that was a criminal offense.
I did too. Guess not.
What the hell? If you or I did that, we'd be behind bars for 20 years.
More than 20. I think more than 20.
More than 20. So don't get me started. But PM, Prager Metis, was fined by the SEC $745,000. I'm curious, how the hell do you audit a $30 billion firm which uses vaporizing text, DMs, and QuickBooks? How the hell do you audit that? At what point are you guilty of aiding and abetting fraud?
The level of or is it just that level of incompetence? Because
I don't know which is worse. I don't know.
It's obscene. That fine should be a hell of a lot more than that. And honestly, there should be some jail time for some of those.
There should be jail time
at PM.
You can't start to audit a company like that and ask to see their books, and they hand you a Macintosh that has access to QuickBooks. You're like, oh, hell no. No.
That's exactly what I would have said.
Not only no, but hell no. Um,
Did
at
they
that
only
point
have
in
one
time,
version, one license for QuickBooks?
I
Do we know, or did they
I
have a
I
couple?
don't even know. I assume it was a I don't even know.
I'm sorry.
I just I'm sitting here shaking my head. I can't give you good answers to that.
That's the funniest thing I've ever heard.
I want to know how much Prager charged FTX. How much do you charge for an audit of a $30 billion company with 5,000 employees and a million clients? I mean, that's got to be 10 million a year. Oh, wait, it's all I have to do is just open up QuickBooks on a Macintosh.
Well, no, you can dial into it. QuickBooks has a thing where they can just dial in
Yeah.
and grab it. That's probably
I
what
just,
they did. Dialed in and
but
grabbed it.
so that they probably charged millions of dollars and the SEC fines them 745 grand. No jail time, no convictions, no criminal charges, no other civil processes. To me, John Ray ought to be on these people's ass.
I bet you he is behind the
He
scenes.
he ought to go after them as well because they were definitely aiding and abetting in the fraud. They had to
How do we
know.
know he's not? Maybe he is and we just don't
Maybe
know.
he is. I haven't
Or
heard
maybe
anything.
he's
I haven't,
just old and tired now after all that other shenanigans he had to clean up.
you know, could be. Um,
I would love to have been the auditor for that company. I would have had a field day.
oh, I'd have,
I would like, hell no.
I'd have just resigned.
Oh,
There's
I'd have
just
been, what are
I
you
would
talking about?
not have been involved with that.
IRS 1-800. What is it? 829 826 1040.
Yeah.
IRS.
Let
I'd
me
like
call them up now and say, I've got a fraud y'all can investigate.
how much do I get? What percentage do you give me? 1?
Seriously.
I mean, seriously,
Seriously.
if you had reported them to the IRS, how much money would you have gotten for that? Don't you get like 1% or 10% or something?
I
Like,
think I think they pay like 10 or 20%.
it's a lot for
Yeah.
whistleblowers. Yeah, I would have been blowing that whistle.
You're damn right.
That's where PM
I'd have been
messed
I'd have been standing butt naked in front of the IRS building with a bullhorn and a whistle.
up. I got one for you.
You can't ignore me.
Oh, and the IRS will come for you. They don't care what party you're in. They will be
Yeah.
coming for you if you don't pay.
So
Well,
we'll
they might get them. I wouldn't think the IRS might be looking into PM after that.
They might, and I'm still not sure what the IRS is going to do with Ellison and Sam and Salami, who actually went to jail today.
Oh,
He walked into jail. Jane sent me this a little earlier. He is officially in prison custody. She also told me he did, properly edit his LinkedIn profile and said, I'll be in jail for a while. Y'all hang on. It's just epic. This whole group.
well, yeah,
How they ever.
the IRS is gonna get them for that money.
Yeah.
Hey, we're gonna tax millionaires and billionaires, right? So I'm sure they'll go get their money from them.
That's why they hired 80,000 more auditors so they could go after all the billionaires.
It's really not that many. If you look at all the IRS offices in the country, that's not even one per office. So I know that people are whipped up, but it's not even one per office and they are understaffed. So
See,
put
I'm
it,
one of those that thinks the IRS ought to be banned and we just go to a flat tax where
oh,
you fill out your taxes on a postcard.
I'm all for a flat tax. I think that
Yeah.
that's better. A proportional flat tax, I think, would be better. Or back to the way it should be, where they just make their money from tariffs and not us. But if we
Really.
have
Yeah.
to pay a flat tax, that's definitely the way to go. I don't think we'll ever get there, though.
I kind of probably will agree with you.
Not in our
Hey,
lifetime.
anybody have, any other questions? I I'm getting a little hoarse. It's still a little early, but I'm starting to wheeze and cough a bunch here. So my voice is about to pass puberty and give out. Um, be glad to try to answer any questions. For those of you that are with us, if you will, please hit the like and subscribe button. Ring the hell out of the bell. Um, I want to thank Jane for joining us tonight, filling in for Ellen, who is currently struggling with the plague. Hope she is feeling better or get well soon. We all send her our best wishes. That she'll be back to her ornery, feisty self soon. Did I mention y'all need to go ring the bell?
Yes. Thank you, everyone. Thank you.
Really
Thank you.
appreciate y'all joining us tonight. Hope that the time was profitable. And, if you have questions that come to your mind after, post a comment or DM me on Twitter at Moffat on Money or email me moffatonmoney@gmail.com. If you're not following on Twitter, please give me a follow there. I post some fabulous tweets.
You do?
I'm biased, but still honest. And we'll look forward to seeing you Tuesday night for Tuesday night Q&A. Bring your questions, comments. If there's some subject you want me to address, let me know. We love to hear from y'all. If you're on the replay crew, love you guys too. Appreciate y'all, following up on the replay crew. If there are no further questions, that's about all I have got, Jane.
We're good. Thank you for cheerful.
Cheerful. Good seeing you tonight. Those in the family, we love you guys. Appreciate y'all. Hope y'all have a great rest of the weekend. Our time is up. We thank you for yours. Good night, everyone. Blessings to you.